Welcome to the County Conversations podcast, brought to you by the Florida Association of Counties Institute for County Government with support from the University of Florida's IFAS. In this podcast, we dive deep into the diverse and dynamic world of Florida's counties with engaging interviews and thought-provoking conversations surrounding the challenges as well as successes of Florida's counties. Each episode brings you first-hand perspectives from county commissioners, government officials, community leaders, and subject matter experts who are shaping the future of our state. We explore a wide range of topics from economic development and public safety to environmental conservation and emerging technologies. Our aim here is to provide a platform for knowledge sharing, collaboration, and inspiration for county officials and residents alike. Whether you're a county commissioner, government professional, or simply interested in understanding the local government landscape, we hope this podcast provides valuable insights and practical takeaways on all things counties.
All right, hello, and welcome to another segment of the County Conversations podcast brought to you by FACTS, Institute for County Government, with support from the University of Florida IFAS. I am Eric, and on today's podcast, we're going to be discussing a topic we've had on our whiteboard for several months, and that's property insurance. And for those paying attention to the news, hardly a day goes by without property insurance being mentioned in a not so positive way. And I took out some headlines yesterday, and here's how some of them led. And this one's from The Guardian. Florida rocked by home insurance crisis. Tampa Bay Times, welcome to Florida's property insurance jungle. Only the strong survive. WPTV, AAA dropping some Florida insurance policyholders. And really the one that caught everyone's attention, this is from the Orlando Sentinel. Farmers becomes latest company pulling out of Florida amid property insurance crisis. And embedded in many of the media articles I came across are some insightful quotes from today's podcast guest, and that's Mark Friedlander. Mark is the communications director with the Insurance Information Institute. It's a position he's held since 2019. And prior to that, he spent 13 years with Main Street America Group, a super regional property casualty carrier in Jacksonville. Mark, welcome and thank you for joining us.
Thanks for having me today. I really appreciate it.
All right. Can we begin briefly by having you talk about the Insurance Information Institute, its mission, history, and membership?
The Insurance Information Institute was founded back in 1960. We are a data-driven, nonprofit research and education organization. We are nonpartisan. We're not a lobbying group. And our focus is on helping consumers gain a better understanding of insurance. Primarily, the focus is property casualty insurance, although we do also provide support in the life insurance space as well.
Great, thanks. As I said, you're mentioned a lot in a lot of the media articles across the state, on TV. I've seen you on. Particularly Jacksonville does really good coverage on property insurance, so it's been my kind of go-to source. But other than paying my car insurance and my homeowner's insurance, I'm outside of my comfort zone when it comes to this topic. That said, having lived and worked in Florida for most of my career, some of it in state and local government, I have at least passively paid attention to this very volatile issue, whether it's in the media, at the state legislature, either a special session or non-special session. Property insurance just continues to come up. So I guess if you can, in a very broad way, tell us what the Florida insurance environment looks like today.
The Florida property insurance market has been in crisis for several years, and unfortunately, it was primarily a man-made crisis. That's the bad part of the situation. There were two factors driving this crisis over the years. One was legal system abuse, the other claim fraud, and it got to such a perilous state that we started to see insurers fail. We had 6 insolvencies last year, 1 more insolvency early this year. 15 companies that we're aware of have placed moratoriums on writing any new policies in the state. We're hearing from other sources it's much worse than that. And we have now 3 companies, including Farmers, which made the announcement last week about its exclusive business, and I'll explain the difference there. But part of Farmers' business in Florida is going away. And now we've heard about AAA insurance, small insurer here in Florida, writes about 150,000 policies a year. And they're only non-renewing what they call a very small portion of policies. They haven't given the number, so we don't know, but it's a very small portion. But you have a crisis when national media picks up on that. And for example, a Today Show story ran this morning, focused on AAA non-renewing a few policies. It's not a national story, but it is in the big picture, it is. But companies non-renew policies all the time in Florida. Not anything new. They look at their risk exposure. They determine there's certain risks they no longer want to write for a variety of reasons. That doesn't make headlines. The reason why this latest story made headlines because of the Farmers Group news. And to explain the Farmers Group news, Farmers sells insurance through a variety of channels, through their own, what they're called captive agents, meaning exclusive agencies, just like State Farm agencies have their own agents. That's all they do is sell State Farm. Same thing with Farmers agents. But Farmers also has subsidiaries that operate in Florida that sell different brands. For example, under the Foremost Insurance brand, that's home insurance, and Bristol West Insurance, that's auto insurance. So in total, Farmers is going to non-renew 100,000 policies over the next 18 months, a very orderly process. No cancellations. This is all following the state regulation of non-renewals, meaning you get 120 days notice, and it won't even start until the fall, because there's a 90-day window after they have informed the Florida regulator. So everybody who has a Farmers policy is protected through hurricane season. That's good news. But 70% of their business in Florida is going to stay because of these subsidiaries. So when you say Farmers is leaving Florida, technically not true. So you kind of have to dig a little deeper. And unfortunately, some of the state officials that were a little upset about this, I guess I'll just leave it at that without naming names. You can probably read the headlines. They didn't get the facts right at all. They said Farmers is abandoning their customers during hurricane season. 100% false. And this is where we come in. We explain the facts and figures and analyze the market. Once again, being nonpartisan, non-lobbying, we could tell the facts to the consumers. This is what's really happening. This is how it's going to impact you, Mr. and Mrs. Florida consumer or Florida homeowner. So yeah, still very volatile conditions. In fact, just heard from a insurance agent I know who's been in the business over 40 years, said it's the worst market he's ever seen. And this person knows his business well. He said it's the worst we've ever seen. I've also heard from other sources, unsubstantiated, that only a handful of companies are actually actively writing new home policies in Florida. Sounds low, but possible. And here's why. You need to look at the other part of the equation. Citizens Property Insurance Corporation is the state-backed insurer of last resort. It is intended to be a backstop when there's no other market available. And last week, the CEO of Citizens went before their board meeting and stated, we are on pace to reach 1.7 million policies by year end, which would be their all-time high, by the way. They're at about 1.3 million now. That means 400,000 net gain on customers in the last 6 months of the year. That's incredible growth, almost unheard of. So if that's what the CEO of Citizens is saying, that's very scary. That means there's virtually no private market, because how could Citizens grow that fast over 6 months? And then at the same time, Citizens on the positive side recently announced they now have companies that will take out some of the policies, called their depopulation process, meaning they move policies back to the private market, which is signs of a healthy market. And they're indicating, according to an announcement from the Office of Insurance Regulation, that nearly 200,000 policies are going to move in the last quarter of the year. Well, that's great news, because Citizens needs to depopulate heavily. They're way overexposed in terms of risk. And if 200,000 or so policies move by year end, that's fabulous news. But that doesn't equate with what the CEO said before their board last week. So we're not sure what to think here, to be honest.
Well, can we talk about Citizens and its formation and what the difference of the insurance environment was pre-Andrew versus where we're at today? So I know before Andrew there was some government involvement in wind underwriting for some coastal communities, I think mainly down in Monroe County. But what was happening with the insurance industry after Andrew? Why were they? Because let me back up. You identified litigation and unscrupulous roof contracting, and I agree with all of that. I think that everybody does. But was that taking place back after Andrew? What happened there? What's different?
Let me explain. Big difference was pre-Andrew, there was no such thing as a hurricane deductible. And Andrew was the generator of hurricane deductibles, not only in Florida, but other hurricane prone states, where it would now be a shared cost of coverage for hurricane windstorm damage. What happened with Andrew was major insurers took historic level losses because they were overexposed in Florida and there was no sharing, no hurricane deductible. So that really drove the hurricane deductible. So as a result, major insurers started to pull back in Florida. Some actually left the state. Although today, good news is all the major insurers are writing in Florida. Most have small market shares, but we heard from State Farm a few days ago that reconfirmed their commitment to Florida and how supportive they are of recent legislation that was passed that will help stabilize the Florida insurance market. And State Farm actually grew year over year last year. A lot of people think, I've seen reports saying State Farm's not writing new policies. Well, that's not true because they actually grew their market share. One of the few companies in 2022, they're now about 6.8% market share, third largest writer of home insurance in the state. Citizens, of course, being number one now. In fact, the most recent report from the Office of Insurance Regulation shows Citizens at 18% market share. That's double any other private insurer. The highest private insurer on the list is called Universal Property and Casualty out of South Florida, typically have been one of the top 2 or 3 insurers in the state. They're at about 9%. They're half the market share of Citizens. So once again, that just shows the volatility. But Citizens, why it was created in the first place, was to be a backstop for the entire state, not just coastal counties. So Citizens is writing coverage in counties across the state now because so many homeowners can't find coverage with the private market. That's why they're growing at, they're announcing, I believe their recent data showed more than 30,000 new customers a month. That's an exorbitant pace and it hasn't slowed down. They've been at 30,000 plus for at least 2 years now, straight every month. So that's always our first sign of trouble in the private market when we see Citizens taking on the majority of business and growing their market share. They were 9% at the end of 2021, 15.6% at the end of 2022. Latest OIR report says about 18. They'll be at 20 by the time this year's over, at least. So they are growing at an extreme rate. And until Citizens virtually stops growing, actually start seeing negative growth, meaning they are offloading policies and not adding too many new ones each month, we know we have an unstable market. And I know recently Senator Brandis, a longtime state legislator here in Florida, now he is a private citizen. He's term limited, so he's no longer in the legislature. He recently predicted in a report that we will not see a stable market till at least sometime in 2025. So that's going to be, if that's the case, and he usually has a pretty good pulse on the market, we have a lot of pain and suffering for Florida consumers before then.
Can you speak to how does a company that's going to stay in Florida but decides to non-renew certain policies?
Oh, that process? Sure. So each company.
I'm sorry, not the administrative process, but what internal decision in terms of modeling risk?
Yes, that's what I was going to get to.
Okay.
Thank you. Yeah, good. Each company has to assess its own risk tolerance and determine whether it could profitably write business in Florida. And companies continually review their risk portfolios and make determinations that certain homes don't fit the criteria or certain communities don't fit the criteria. Sometimes a company will decide to non-renew policies in an entire zip code or an entire county. It's possible. But in the case of AAA, they made the decision of individual homes. And once again, we don't know the number. They say it's small. Hope that's the case. But they made individual risk decisions. Other companies do this frequently. This is not an outlier by any means, even though it's getting headlines like it's the first time it's ever happened. This has been happening for years. And that's just another sign of turmoil. I mean, in fact, I think in a statement that AAA gave to the media, they said, while they feel the reforms passed by the legislature are very solid, it's going to take time for those to work. And in the interim, they need to determine risk exposure and have trimmed their total population of policies. So these were individual decisions. These were not mass non-renewals by any means. The only bad news is we know that homeowners have recently received these letters. It's during hurricane season. That's really the standout point to us. Very difficult if you're a homeowner getting a non-renewal during hurricane season, because you want to be financially protected for the potential of windstorm loss from hurricanes. And now you have to shop and find other coverage, so there's no gap in coverage, because the last thing you want as a homeowner is a gap in your windstorm coverage during hurricane season. The timing is bad. I am fairly confident AAA did not want to announce this publicly. It came out because a policyholder called a local TV station and complained about it when they heard the farmers news.
Yeah.
And that's how the ball started rolling. I can assure you farmers did not want to publicly discuss this, but now they're at least issued a statement, explain why, and hopefully it's not going to have major impacts. But certainly if you're one of those homeowners that got a non-renewal notice, it has big impact for your family.
Well, you and I were talking about Citizens and how, but for Citizens, what would the environment in Florida look like? What would the real estate environment look like? What did the business look like had Citizens not been created?
It would be absolute chaos without Citizens. First of all, most states have what's called a FAIR plan, a backstop insurer. That's fair access to insurance requirements. So Florida's not alone in that. Florida was the first to create a FAIR plan, which is Citizens, but most states, especially high risk exposure coastal states, have FAIR plans, as do states, for example, in Tornado Alley. So FAIR plans are very common. In fact, it was Colorado recently. I was trying to think of state. Colorado with major wildfire risk. And they recently created a new FAIR plan, the first state to create a new FAIR plan in 41 years. So it's been pretty well established that you have these FAIR plans. Now, the big difference is your FAIR plan is never supposed to be your largest insurer. And in most states, it's a very small percentage. In Florida, it's a massive percentage, as I said, 18%. Going back to your question, without a FAIR plan, without a Citizens, what happens? You would have more insurance written by what's called the surplus market. Surplus lines carriers are insurers that don't typically operate in Florida, but will write exposures in Florida, but are not regulated by the state. So they're called non-admitted carriers, meaning they will write business in Florida, but they will charge the rates that they feel are appropriate for that risk. They do not need to get those rates approved by our Office of Insurance Regulation, meaning most likely on average, it's going to be much more expensive than a private Florida domestic insurer. Number one. Number two is they don't necessarily offer the same level of coverage that a Florida private insurer offers. So you may be paying 2 to 3 times as much in premium for a surplus insurer and don't get the same level of coverage. So while you get the essential coverage, which is windstorm, which is the most essential coverage if you have a home in Florida, you may not get some of the other bells and whistles of policies that are typically written in Florida. So it's kind of a good news, bad news. At least the market's there, but it is very expensive. And the other thing we're hearing, speaking of surplus, some of the surplus lines carriers have been reluctant on writing risk in Florida. They were much more open in previous years. And once again, it's all about the litigious environment. Everybody who looks at Florida says Florida has an insurance crisis. They say, of course, they get hurricanes. Yes, we do get hurricanes, but remember all the years we had no hurricanes. 2019, 20, and 2021, no direct landfalls from hurricanes. Yet the insurance industry has not made a profit, either in underwriting or net income, since 2016. What's wrong with that picture? It's litigation expenses. We saw a recent report from the OIR that indicated the average defense costs of the insurance industry have been running about $3 billion a year for the last 3 years. That's unsustainable. And to be honest, it's amazing we have as many insurers operating in the state today as we do, that they haven't all decided just to close shop and move on. And once again, going back to Senator Brandes, he has predicted that more companies will follow suit with the farmer's decision of determining this state is just too risky to write in. We're going to pull back. We don't know if that's true. We have no information to verify that, but Senator Brandes has a good feel for it, and he thinks there will be other actions taken by insurers to reduce their risk portfolio at significant levels. So we'll see. We'll see if that comes to fruition. So unfortunately, we're clearly not out of the woods when it comes to all the volatility that we've been facing.
So how does the insurance industry look at the citizens?
Well, let me see. I'll take a couple trends here. Number one is, let's take it from the insurance carrier side. The big issue with Citizens versus the private market is because Citizens is rate regulated, that's Florida statutes, their average premium is 40% less than the private market. So in previous times, it was a no-brainer. Most policyholders would rather go to Citizens. They're going to save money. Even though it's technically not an apples to apples policy, without getting into the weeds of the coverage, you don't get quite the same level with Citizens as you do with the private market. But once again, essential coverages for windstorm damage and other major perils, that's the most important part. But it's not really apples to apples, but nevertheless, 40% less. So for the homeowner, they're going to take the 40% less every time. However, there's a new statute that was passed in a special session in December, which now requires Citizens customers to move to the private market if they get a takeout offer within 20% of their Citizens rate. So say, for example, you're paying $3,000 annually for premium for Citizens. If you get a takeout offer from a private insurer for $3,600 or less, that's within the 20% threshold, you are required to move. That wasn't the case in the past. So that will be another driver of depopulating Citizens. So it's not the open season on Citizens policies as it was in the past. You do have to move to the private market if you fit that new threshold of the 20% rule. So that's a good thing to help depopulate Citizens. So that's from the carrier side. From the insurance agent side, I could tell you insurance agents are pretty upset when they have to write Citizens business, because first of all, the majority of business now is Citizens, so they're writing a lot of policies. The commission levels that agents receive, and these are independent agents, by the way, independent agents do not receive the same level of commission from Citizens as they do from private insurers, much less. So if the majority of their business is writing Citizens policies, they're losing money. They're not bringing in enough revenue per year if that's the case. So it's hurting the independent agency distribution channel. They may never come out and say that publicly, but I can assure you they're not happy with it.
One thing we haven't really talked about is, we talked about litigation, the fraud, but what about the cost of reinsurance? What role does that play?
Yes, reinsurance is another critical factor in how rates are determined, not only in Florida, but all other states. And what we're seeing this year, on average across the U.S., we're seeing reinsurance renewals, running about 30 to 40% versus last year. So 40% increase in the cost of reinsurance year over year. In Florida, we have seen renewals running from 40 to 70%. Probably the average runs about 50 or so, 55, but as high as 70% for certain layers of reinsurance, because that's how reinsurance is sold at a variety of layer levels. That's really expensive. So kind of first, the good news is we understand the reinsurance renewal process for Florida insurers went smoother than expected, meaning companies were able to purchase reinsurance on the global market because there were some very extensive concerns about that would even be a possibility. So that has happened according to the OIR report, but the cost is extremely high year over year. So what happens when insurance companies have to pay that much for their reinsurance? It gets passed along to the consumer. Another factor in why Floridians are paying, according to our analysis, the highest average rates in the country. The Insurance Information Institute has determined the average premium this year is $6,000. The average US premium is running at about $1,700. So 3.5 times the rate. And then in terms of year over year, we're seeing a 42% annual increase on average across Florida. Over the last 3 years, cumulatively over 100%. That clearly is not sustainable, and it's going to drive consumers out of the state. It's going to impact our real estate market, which has been booming since the pandemic began. We see all the reports, very positive for not only sales, but for the values of homes have shot up because of such high demand. It's going to hurt our market. I know the real estate community is very concerned about it. I've heard from many in the real estate community that it's going to eventually have a major negative impact on our real estate market. So very concerning, because we've heard stories of some closings of new home transactions not taking place because the buyer could not find insurance coverage. And it doesn't sound like a big trend at this point, but it's happening. And I know realtors are very concerned about it.
Well, let's talk about some of the legislation that has passed in special session in 2022, and then this year, and then there was also some other legislation passed in the regular session. Can you talk about those and what you believe the impact or effect will be on the industry and ultimately the policyholder?
Yeah, two big takeaways from the special session focused on property insurance in December 2022, eliminating one-way attorney fees, which was the primary driver for legal system abuse for so many years. The other was eliminating assignment of benefits, where a policyholder turns over their claim to a third party, such as a unscrupulous contractor. And that was the driver of all the fraud schemes we've seen on roof replacements, which in turn adds to the litigation abuse issues as well, because a lot of those contractor fraud schemes become lawsuits because the insurance companies deny the claims, rightly so, but then the lawsuits ensue. So that was kind of part one. Part two is a much broader bill passed in the regular session. Governor DeSantis on March 24th signed a broad tort reform bill, which eliminates one-way attorney fees for all lines of insurance in Florida. So it went beyond property. It's commercial, it's workers' comp, every type of insurance policy that's written in Florida now is covered under the one-way attorney fee statute. So very broad, very positive, but here's what happened before that bill was signed. Literally in the days leading up to the passing and implementation of that bill, which became effective immediately upon the governor's signature, more than 280,000 lawsuits were filed against Florida property and auto insurers. We've never seen anything like this in the U.S. judicial system. The trial attorneys just slammed the courts with all these cases. Why? Because they wanted to get these on the books before the new statute took place, meaning one-way attorney fees would apply for all of these lawsuits. So we're going to see a record level of litigation working through the Florida court system this year and in the years to come because of that onslaught of 280,000 lawsuits. And on top of that, even with the new regulation in place, we're seeing excessive levels of litigation being filed month after month. We've seen, for example, the amount of auto windshield replacement lawsuits, which was another big problem in Florida that was addressed in the regular session, and assignment of benefits are now banned for the what are called AOB glass replacement. We've seen a doubling of those lawsuits in the last 3 months. And that's after the legislation took effect. So can't figure that one out. And we've just seen an uptick also in particularly in personal injury lawsuits related to auto claims. So we're still seeing a large volume of litigation against Florida insurers for a variety of different types of claims. It's not slowing down, the bottom line. So that's a little disturbing, to say the least.
So while the legislature has addressed two big factors that you said has been driving up the insurance rates, are you saying it's not going to work its way through the system for several years?
Potentially, and that's why we've been asked many times, put on the spot by media, when is it going to get better? We can't predict that. I told you earlier about Senator Brandis, who predicts sometime in 2025. We're just not sure. We just don't know, because there's so much interference in the system to make the market better. We can't pick a date. What we could tell you, though, is when we finally get to a more stable market, what that will mean for consumers. That means more companies will want to write home insurance in Florida. Those that have either stopped writing business will open up the books and start writing a lot more policies, and perhaps some new players will come into the market. We've heard from the regulator's office that there is interest in other companies coming to the market in the near future. So that's positive. That's a good thing. So more choice means more competitive pricing, getting multiple quotes. More competitive pricing leads to a better end result for consumers. So that certainly is going to be really the key factor when we see a stable market, but we just can't predict when that's going to happen.
Do you think anything else needs to be done legislatively?
We've heard some proposals. In fact, there's been some proposals where another special session is being called for this year, and talking about rolling back the price of insurance, or at least putting a cap on what insurers could charge, meaning basically a moratorium on rate increases. Here's where we see a big problem with that. If you start to cap the cost of risk that insurers are writing here in Florida, you will drive more companies out of the state. In fact, many more companies. That would be, to us, a trigger to a collapse of the private insurance market. That's how bad things could get. It would be absolute chaos, and it would be the worst possible thing to do. Because even now, when insurers are being allowed to charge what they feel are actuarially sound rates for insurance, other than Citizens, once again, Citizens rate restricted, they can't charge actuarially sound rates, but the private market can, and they go before the regulator to get those approvals. Even with those actuarially sound rates in the private market, they're still losing money because of all of the litigation expenses. So there's only so much you could charge and get approved for in the state of Florida. And these companies are modeling their risk, but unfortunately, the litigation expenses keep mixing in. And there's no doubt to us that the reason why 7 companies failed between February 2022 and February of this year, they were litigated out of business. All of them were hit with several thousand lawsuits over a short period. Smaller regional insurers do not have the capital position of the larger national players, or even the larger, what we call super regional insurers that write in many states. They can't absorb those expenses. And as of today, we're aware that 18 companies are on a watch list of the Florida regulator because of their financial health. 2 of those are being considered for enhanced monitoring, meaning those companies are on the brink of financial failure to us. That's what that tells us. So is it possible more companies can go insolvent this year, even without hurricanes? Yes, absolutely. There's a potential that we could see at least 2 more companies fail this year. We're not predicting that. We're certainly not hoping that will happen, but it is a possibility based on the latest report we've seen from the regulator. So it's concerning when you have, out of 47, what we call Florida residential domiciled insurers, meaning they are based here in Florida. They primarily just write residential business. They're not a multi-lines insurer that writes auto and other types of insurance, just homes and condos and perhaps renters insurance as well. Out of that 47, 18 are on a watch list. That's extremely concerning to us.
Mark, something I find interesting about our discussion is that you have talked about, inappropriately, fraud litigation, the cost of reinsurance as major determinants of whether a private insurance company is going to do business in the state of Florida. But something I thought you would have stressed also more, and I think folks from the outside, is that Florida is simply hyper vulnerable to natural disasters. So in saying that, let's pretend we have a more stable market with many carriers in the future. What factors does Florida's vulnerability to storms play in making the decision for an insurance company to do business in Florida?
Well, the fact that Florida is always going to be the most high-risk state when it comes to hurricane damage, historically, twice as many landfalling hurricanes in Florida versus the rest of the country. All when you look at all the Atlantic and Gulf Coast states and compare them to Florida, every model that comes out every year, the forecasts that come from the experts that assess hurricane activity for the season, Florida is always top of the list in terms of percentages, that a landfalling hurricane will strike Florida at twice the percentage than any other state. So we're always at risk. And yes, does that play into the equation of how insurers factor risk into writing in Florida? Absolutely. But the thing is, most insurers certainly model climate risk appropriately, and they base their rates on that risk. Now, the problem here is, as we see climate risk continue to increase in Florida and all over the country, it's not just hurricanes, it's all types of catastrophes, as we know. It's tornadoes, it's wildfires, it's hailstorms, it's just severe convective thunderstorms, all types of hazards. And we're seeing more significant impacts, meaning damage, insured losses. That has to factor into your insurance rate. So for anybody to say, we know rates are going to drop in Florida, we're not sure if that's ever going to happen. I'll be honest with you. We don't. It's really hard for anybody to realistically predict that, even though I know some of the legislators are expecting that based on the strong reforms that they passed in recent sessions. It's not a realistic scenario in today's climate risk environment. Now, the bigger issue is, can we get our rates at a moderate level? That's what we would call, once again, another factor of a stable market. Because right now, we're jumping at, as I said, 33% last year, 42% year over year for 2023. We can't continue to keep going up at that level. We need to get these rates back to what the US level is, which was about a 10% average increase this year. If we get those to a moderate level, to us, that's a big win. I know consumers won't be happy because they want their rates rolled back 50% or more. I get it. I live in Florida. I pay home insurance. I know how expensive it is.
If you have a stable market, you get more carriers, you're spreading the risk. Isn't there an opportunity, if you're spreading the risk, my exposure is less, would that pull the rates down over time?
Potentially in a stable environment, the answer is yes. But once again, you have those outlying factors. Reinsurance costs. If reinsurance continues to increase at 40% or more a year, those costs need to be passed along. Who's going to eat those costs? So yes, even though spreading your risk more is a benefit to the marketplace, you have all these other factors. So once again, I just don't see a scenario, at least in the short term, meaning the next few years, where rates could come down.
Sticking with the rate discussion, can you talk about the rate structure of Citizens Insurance and how it compares with the private market, and maybe more importantly, how it impacts the private market?
Well, Citizens, once again, being rate restricted, they have asked for a rate increase this year, an average increase, including all their fees and expenses, 14.2%. That would be the highest on record for Citizens. They can't go any higher because, once again, they are rate restricted. So they are not being allowed to charge actuarially sound rates. In fact, according to their own analysis, if they were a private insurer, they would have sought a 57% increase for this year. Instead, they went before the regulator with 14. Just to turn the clock back, last year, they went before the regulator, I believe it was about roughly an 11% average increase, if I'm not mistaken. They were only allowed by the regulator to implement 6.4. So you have 6.4% with Citizens, 33% average with the private market in 2022. You could see the problem.
Yeah.
It sounds like a real bargain for Citizens customers, but here's the big picture. Because Citizens has been charging rates well below market, once again, not actuarially sound is the term we use in the insurance industry, they are setting themselves up for the potential of depleting their reserves from major storm losses. What happens then? Every Florida consumer is on the hook for what we commonly refer to as a hurricane tax, meaning you would see multi-year surcharges on every insurance bill you receive. Not only if you're a property owner, a renter, even a driver, auto insurance bills would see multi-year surcharges to help replenish the reserves of Citizens. So that's what we're facing. We're facing where Citizens is going to have a shortfall in its reserves from heavy claim activity, and every Florida taxpayer's on the hook. Really bad scenario. And that's why it continues to get worse, because they keep spreading their risk exposure at not appropriate rates. So in other words, it's even worse than it was certainly last hurricane season. Now they have much more risk on the books. They're not able to charge the correct level of rates for this. And I know their CEO has time and time and again said it's not a sustainable model. He keeps pressing that something needs to be done. And we're not lobbyists, and we don't push for legislation. It's not what we do, but certainly we wouldn't be surprised if that is addressed at next year's legislative session. You know, just the rate structure of Citizens, because I know that was put in place, I believe it was during the Christ administration, according to my memory, where they had this heavy rate restriction and weren't allowed to charge a certain level of rates competitive with the private market. And Florida is the only state, by the way. Every other state mandates that their FAIR Plan, their backstop insurer, charges more than private market to disincentivize consumers from going to that backstop is a choice, because that's what's been happening for years. Insurance customers took a look at their renewal or their quotes and said, oh, this is outrageous. I'm going to get a quote from Citizens. And they just moved to Citizens. Once again, with the new regulations passed in the special session in December, not allowed anymore. You can't just pick Citizens if it fits, once again, that 20% threshold.
All right, very last question before I let you go, and you've been generous with your time. And before we started, we were talking about what we do, and we talked about flood insurance. So flood insurance has been, obviously the National Flood Insurance Program is the big market in Florida. I think they got 1.7 million policies here. But I know Senator Brandis was championing a lot of the private sector incentives to come into that. What does it look like today in the private sector?
Florida's private flood insurance market is the most robust in the country. There are dozens of private flood insurers that are writing in Florida. And once again, pushed by Senator Brandis, supported by the Office of Insurance Regulation, they have invited private insurers to write flood in Florida. So yes, you could shop your flood policy actually and get very competitive quotes. And it's extremely robust compared to the home insurance market. Very extremely robust. I mean, big difference between shopping for flood insurance versus home insurance. And in fact, in many cases, you'll get a lower rate from a private flood insurer rather, and you will get better coverage because private flood insurers offer higher limits for both your property and your possessions versus FEMA's NFIP, which is a $250,000 cap on property, $100,000 on contents. So you could get higher limits and also get what's called additional living expenses or loss of use, which is a common inclusion in a standard home insurance policy. NFIP policies do not include loss of use. So meaning if you're displaced from your home, you won't get coverage for temporary living like you would with your private home insurance policy. So with NFIP, if your home is uninhabitable for a long period, you have to pay out of pocket. There's no coverage for that. Most private policies do include that, once again, called loss of use or additional living expenses for your temporary living, such as lodging and meals and things of that nature. It's worth shopping the private market.
Are they using similar models as FEMA?
Well, FEMA now has implemented what's called Risk Rating 2.0, which is a actuarially sound approach to rating risk. And it's based on models of the private market. So is it apples to apples? Depends on the company. I mean, every company has its own proprietary modeling, but FEMA's modeling is now in line with the private market in general. And the bad news, though, is for consumers, as you said, most homeowners in Florida that have flood insurance have a FEMA, National Flood Insurance Program policy. The rates are going up steadily. They have a new rate format came out recently. They kind of modeled what the end result will be in terms of rates, and it's pretty scary because they were underpricing risk. FEMA has operated at a deficit for its entire lifespan. They've been bailed out by Congress numerous times. They're paying an absolute fortune in interest on their losses year after year. The model is not working. And the reason why FEMA even created flood insurance was because there was no private market at the time. FEMA, I could assure you, does not want to be in the flood insurance business. In fact, they would be very happy if every customer moved to the private market. They're not an insurance company, but they created this plan because there was no private market. Now that we're seeing a more robust market, we are expecting the private market to grow, market share to grow, and take some of that load off of FEMA, but we'll see where it goes. Right now, it's still nationally well over 90% FEMA policies and well under 10% private market. And the other big issue is insurance gap. I'll talk about this real quick. In Florida, we're a little better than the US average, but across the country, only 4% of homeowners have flood insurance. Yet we've seen devastating floods in states in every region. It doesn't matter. It's nothing to do with being coastal. We've seen them in eastern Kentucky, in Vermont last week from major rainstorms, catastrophic flooding in the state of Vermont, up in New England. It could flood anywhere, anytime if you get substantial rainfall. And all homeowners, to be financially protected, should have flood insurance. In Florida, I believe between the private market and FEMA, we're about 18% market share total. That's still 82% of Floridians don't have flood insurance. And we saw how many families were devastated by Hurricane Ian last year, didn't have flood coverage, or they had it and they dropped it when they got their FEMA renewal. Said, I'm not paying this high new rate. I'm just going to pass.
Look at Broward County.
Oh, Broward especially. Yes. Once again, a spring storm, nothing to do with tropical conditions, just a spring storm that sat over Broward for 24 hours, 30 plus inches of rainfall, record level. If you live in Florida, we think it's a big mistake if you don't have flood insurance, because first of all, most areas of Florida are considered low risk, even though they could flood. Obviously, we've seen it, but low risk means they're not in a FEMA designated floodplain. Your flood insurance could run $500 or less a year. Is it worth it to invest $40 or so a month to be protected from floods versus taking a risk? That's what you have to ask yourself as a consumer.
That's great. Good information. Mark, this has been a little scary, but very, very informative. Like I said, we've had this on our whiteboard for a while, and I was trying to find the right time and the right person. And I think they converge given we've seen in the media. So I want to thank you for coming on and appreciate your time today.
Glad to be here and give some insights on what's happening in the market, what are the effects, and what are the long-term outlooks, as best we can at this point. What are we expecting to see going forward? So really appreciate it.